Ladies and gentlemen, good day, and welcome to the Elecon Engineering Company Limited Q2 FY23 conference call. As a reminder, all participant lines will be in the listen-only mode, and there'll be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Himanshu Yadav. Thank you, and over to you, sir.
Thanks, Mike. Good morning, everyone. On behalf of Edelweiss Wealth Research, I welcome you all to Q2 FY23 concall of Elecon Engineering. Please note the results have been mailed out to you, and you can also access the same on company website as well as on the exchanges. Before we proceed, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with business risks that could cause a future result, performance, or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results of this quarter and answer your questions, we have with us the management of Elecon, represented by Mr. Prayasvin Patel, CMD, Mr. Kamlesh Shah, Group CFO, and Mr. Narasimhan, CFO. Mr. Prayasvin will give a brief overview of the quarter gone past, and then we will open the floor for Q&A sessions. With that said, I would now hand over the call to Mr. Prayasvin. Over to you, sir.
Thank you. Good morning, everyone. Ladies and gentlemen, a warm welcome to our Q2 and H1 FY 2023 conference call. We are pleased to report yet another quarter of strong financial performance as we continue to deliver consistent improvement in our results over the last several quarters. Discussing the results at a standalone level, the total operating income increased by 27.7% year-on-year to 305 crores compared to 238.8 crores in the corresponding quarter of the previous year. The EBITDA on absolute basis increased by 47.6% year-on-year to 75.2 crores as compared to 50.9 crores during the corresponding period of the previous year. This translates to EBITDA margin of 24.6% in Q2 FY23 compared to 21.3% in Q2 FY22. We closed this quarter with a net profit of 47.6 crores as compared to 23.1 crores during the corresponding period of the previous year, reflecting an increase of 106.1%. Let me highlight some key points related to the results. The gear business witnessed strong demand. The MHE business continued to witness consistent improvement and is expected to keep up the positive momentum going forward. Our relentless focus on bringing down receivables has led to decline in working capital days. Coming to the consolidated financials of Q2 FY23, the operating revenues increased by 23.7% year-on-year to rupees 388.6 crores as compared to 314 crores in Q2 FY22. EBITDA increased by 38.9% year-on-year to rupees 92.6 crores versus rupees 66.7 crores in Q2 FY22. The EBITDA margin stood at 23.8% in Q2 FY23 as against 21.2% in Q2 FY22. The consolidated profit after taxes increased by 82.3% to rupees 64.5 crores for Q2 FY23 as compared to 35.4 crores in the corresponding period of the previous year. Return on equity increased to 18% in H1 FY23 compared to 14% in FY22, while return on capital employed increased to 21% in FY23 compared to 18% in FY22. The current ratio improved to 2.1 in H1 FY23 compared to 1.6 in FY22. Debt equity has come down to 0, while working capital cycle has reduced to 88 days. We would like to inform you that the outstanding retention amount stood at 68 crores as of 30th September 22. Also, there are favorable developments related to arbitration awards of rupees 60 plus crores during Q2 FY23. Despite challenging macro environment, demand across our end user industries continues to be robust, resulting in significant ramp up in the order booking, with orders worth rupees 744 crores booked in the gear business and orders worth 94 crores in the material handling business during the half year at the consolidated level. As on 30th September 2022, orders on hand in the gear business is rupees 602 crores, and in material handling business, the orders on hand is 112 crores at the consolidated level. In line with our pursuit for growth, we continue to explore relevant opportunities in the defense space. Elecon is currently the leader in the segment of customized and complex gear manufacturer for defense. Indian Navy in India, which is a matter of great pride and stands testimony to our extraordinary manufacturing excellence. As you are aware, we have successfully supplied India's first indigenously built aircraft carrier INS Vikrant by delivering customized COGAC, combined gas turbine and gas turbine type gearboxes. The company also successfully delivered 14 CODOC, combined diesel or gas turbine type gearboxes, stealth frigates to the Indian Navy in record delivery time despite the challenging pandemic-induced environment. Under our new product development initiative, we are pleased to share that we have designed and manufactured planetary gearboxes employing latest technology. We have successfully manufactured and supplied vertical roller mill drive for India's leading cement manufacturer. The world economy continues to face headwinds on the back of soaring cost and rising interest rates. The company is monitoring the impact of inflation and slowdown in the global economy and is taking necessary measures to mitigate the impact of the same. IMF has recently cut India's FY23 GDP forecast by 60 basis points to 6.8% and also reduced US GDP growth rate for the year to 1.6% on the back of high inflation, rising interest rate, and subdued external demand against a backdrop of ongoing war between Russia and Ukraine. Despite these external challenges, we retain our standalone and consolidated revenue target of rupees 1,500 crores and 2,000 crores respectively for FY24. We strive to sustain our leadership position by focusing on new product development and enhancing value in our existing products. We continue to expand our global footprint, invest in brand building, and undertake various marketing initiatives to increase our overseas revenue and to take these overseas and export revenue to 50% of the overall consolidated revenue by FY30. ESG continues to play an imperative role in our business and in line with our focus on renewable energy. We are happy to share that 70% of energy consumption are sourced from renewable energy. We at Elecon Engineering are conscious of providing equal opportunities and pride ourselves in creating a gender-diverse workforce, promoting women empowerment. We are happy to share that the company is recognized as a great place to work. We remain committed towards the safety, health, and empowerment of all our stakeholders and society we operate in, and have been organizing various events from time to time to support social causes. We have also put in place stringent corporate governance norms to build a responsible and professionally run organization committed towards sustainable growth. Please note that the company has uploaded investors presentation on our website www.elecon.com and stock exchanges. With that, I thank you all for listening in, and we will be happy to address your specific queries about the business going forward.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question on the line of Shubham Agarwal from Equitas. Please go ahead.
Yeah, thank you for the opportunity. And first of all, congratulations on a very good set of numbers, sir. So my first question is related to the new product development that we have mentioned in our presentation, planetary gears. And we have also mentioned that this will help in import substitution. So I just wanted to understand what is the market size and what are the application of such products and how much this can bring in terms of revenue.
Planetary gears are gears which are used in practically all kinds of industries. We specialize in, or we've developed these gears especially in the larger sizes, which go into cement plants, they go into windmills, they go into coal handling plants, sugar, and all kinds of sectors. You would be proud to know that apart from developing this special type of planetary gear unit for the cement, we have also developed very many applications, and in some of the cases we have even come up with a fourth generation optimized gears, which are extremely competitive, lightweight, and are able to do the work in a very extraordinary fashion, even having a fail-safe mechanism.
Right. And is there anything in terms of how big this market size would be, or how much can we get revenue from such products?
Right now, it is very difficult to ascertain because the potential is tremendous. I mean, it is going to, from a few hundred to 1,000 crores, because you can utilize these type of gears in just about any type of applications. Okay, so the potential is very high. Okay, if you bring it down sector-wise, I would total up to at least about 300 to 500 crores on an annualized basis.
Oh, that's good to hear. Secondly, sir, my question was around the current global scenario. So I wanted your view in terms of our subsidiaries, how they are performing, what is the outlook, and also export out of India, and what would be the current trade cost trending compared to last few quarters?
Our export entities are doing quite well compared to what they were doing in the past. They have reorganized themselves, and in spite of the fact that there was COVID, and after COVID, post-COVID, you have the European energy crisis plus a high level of inflation and so forth. We believe that they are poised for growth. And the reason is that we are trying to put in more investments out there, especially in the manpower sector, which is the HR, human resource sector, whereby we would be able to further improve our sales. Okay. And apart from this, we are focusing on global branding and substantial marketing initiatives in Europe and in United States. We believe that should give us very good results going into the future. That is more exports from here, because that is where our focus lies.
Right. And sir, freight cost was one of the main concerns in the last few quarters. So have that kind of gone down for us?
Sorry, can you please repeat? I'm sorry, I didn't get it from.
Freight cost.
Yes, freight costs from here have rationalized. Unfortunately, the increase in time of receipt of material has not reduced. The freight costs have reduced slightly, rationalized, and the world is accepting that the cost of freight has increased globally. But we are also being hit by longer lead times in transportation.
Okay. And sir, lastly on the order book, so we have mentioned 452 crores as order book in the results, and in presentation 602 crores in the gear division. So is this the difference is the order book of subsidiary around 150 crores?
Yes.
Okay. And finally, on the MHE division, are we expected to improve the performance of this division going forward, or we will maintain given the guidance?
No, absolutely. Because for two reasons, we want to also increase the turnover going forward. Apart from that, there are other measures that we are taking whereby the performance would further improve.
Okay. Good to hear that. So thank you for answering my question.
Thank you. We have the next question on the line of Gunjan Kabra from Niveshaay. Please go ahead.
Sir, congratulations for a very, very good set of numbers.
Thank you.
So my first question is that, so how much was the increase in top line contributed by change in product mix? I mean, was there how much was contributed by large gearbox and small gearbox in this quarter particularly?
The quantum of turnover from large gearboxes and small gearboxes.
Yes.
I would say 60% would come from small to medium, and 40% would be coming from the large gearboxes. Okay, this is volume-wise, may not be turnover-wise.
So, what would be the turnover-wise?
I would constitute almost 70-30. 70 coming from the larger units and 30 from the smaller units.
Okay.
Small to medium units.
Okay. Sir, also, when we say that our gas order book stands at 602 crores this quarter, and the same was around 515 crores in the previous quarter. So if you can split how much, firstly, from which sector are we receiving orders right now? And secondly, if you can split how much is for defense and marine in this order book of 602 crores and how much is for other sectors? Like, in terms of, I wanted to understand how much is the long-term orders that we want to execute and how much is the short-term orders that we'll be executing.
The defense orders right now on hand are about approximately 80 crores.
Okay.
Okay.
Sir, and from which sector are we receiving orders? From like the right now in this quarter, from which sector did we receive orders?
Right now we have, there are a few projects which are going to be recently announced by the Indian Navy, where we would be quoting for it. But by the time we receive the orders, in case we are found to be most competitive, it would take some time.
So this is for the future. I'm asking for, like the order book stood at 500 crores in the previous quarter, and this time it's 600 crores. So I was asking from which sector are we receiving more orders?
This is particularly from steel, cement, power. These are the main sectors now which are there. And sugar also, because some part of the sugar is already executed by H1 23. Balance still which is there, that will be executed now. So these are the main sector through which we are getting the orders, which are on hand.
Okay, got it. Sir, another thing is Shanti Gas is also entering into making of differential gas for electric vehicles. So are we also like thinking on this side, because it's a new segment altogether? So is there any technicality difference in the manufacturing process, like what we already manufacture? And likewise, are we planning to supply in the renewable space also?
We are exploring the possibility of getting into the electric vehicle sector.
Okay.
The processes would vary from, the manufacturer of automobile or from the two-wheelers. The processes would vary, but they would not be substantially different from what we are producing right now. So I would say there is a potential to it, and the quantities would be reasonably large in large multiples, and therefore it would be reasonably attractive for any gearbox company to get into it. Gear manufacturing need to get into it.
Okay. So also in the last quarter you guided there was a little wait and watch kind of a scenario regarding, capex activity. There was a decrease in steel price. So how does that look now for you?
See, we are committed to 100 crores of capex, which is from our internal cash generation, and out of which a sizable amount is going towards solar installation, solar plant installation, which shall generate electricity for us. And we are confident that we will be generating 70% of our requirement from renewable energies.
Sir, I was asking on the perspective of capex activity in the economy. So last time there was a decrease in steel prices. So there was a wait and watch kind of a scenario is what you also guided. So how is that scenario playing out right now in terms of, order traction and capex activity?
Sorry, can you repeat that, please? I didn't get it properly.
Sir, I was asking that how is the like in the last quarter you guided that there's a wait and watch kind of a scenario in the capex activities happening in the economy, because there was a decrease in raw material prices, steel prices. So everybody, like different industries, were waiting. There was a muted phase kind of a thing in the capex environment. So because of that, our demand is linked to that sector. So I was asking, how is that playing out right now in terms of building up our order book or in terms of our traction?
As of now, we are not seeing much of change, but we believe that normally after Diwali, the economy normally picks up, especially if the rains have been or the monsoon has been sufficiently good. So we are expecting that whatever the projects which are running a bit slow will get accelerated after Diwali. And we are reasonably hopeful that it is not going to have a significant impact on the demand.
Okay.
As you know, the RBI has increased the interest rates going forward. We need to wait and watch and see the situation, how it pans out, especially for the projects which are on hand. But I believe that basically people who have announced and who are committed to projects, they may just consider a slight increase in cost because of the higher interest rates. But it should not have an impact.
Okay. So also, once we scale up the MHE division, our margins are continuously increasing. We like very good efforts in that. So once we scale up, what kind of margins can we expect to stabilize in this segment?
We are expected to improve our margins to about 15 to 17% going forward, especially as we increase our turnover in that area to approximately 400 crores.
At 400 crores. Okay. Also, sir, last quarter, the gross margin stood at around 50%. Like if we exclude that 7 crores of settlement with a vendor which happened last quarter. So why is this that when the raw material prices have decreased, our gross margin this quarter has decreased? Because I understand that, there's a short-term cycle project where we take a hike or decrease in price easily. It's not like a very big thing for us. So why has the gross margins and how will it play out in this quarter?
See, the margins are varying because of the product mix. And going forward, looking at the situation, I believe we should be able to sustain or slightly improve our margins by the end of the year.
Okay. And the last quarter employee cost...
Operator, request you to kindly come back in queue, ma'am, for follow-up questions.
Okay. Thank you so much, sir, and good luck to the team and to you.
Thank you.
Thank you.
Thank you. We have the next question from the line of Abhishek Podar from HDFC Mutual. Please go ahead.
Thanks for taking my question and congratulations on good numbers, sir. Sir, regarding the target... Yeah, hi, sir. Sir, regarding this target for exports being 50% in 2030, trying to understand what was the number in 1H and how do you see next 2 to 3 years how the ramp up would happen there, and also some indication of initiatives you are taking and how confident you are there, sir.
See, as I had mentioned earlier, we are trying to increase our resources, deploy more resources, especially manpower in the marketing area. We are trying to pursue OEMs as well as projects in these countries, especially where we are strategically located right now. And we have also started moving into South America from United States and into Canada. And we are intending to put up a robust dealership network even in South America as well as in Canada, which would further enhance our business. So there is a complete strategy which is being deployed, and it would help us emphasize on the global branding, especially because we have 3 brands right now. Okay. So we would emphasize on the global branding, as well as these marketing initiatives will bring in good results.
Yeah. So where are we today compared to 50% target that we have, and how do we see 24, 25, moving?
See, we are right now at 12%, 10 to 12%, depending on which year it is. And slowly and gradually we are going to ramp up. Okay. There will be a time when it would be accelerated and it would jump substantially. But as of now, it is difficult to say when would that happen.
Understood. And sir, your commentary on the demand outlook is quite positive, and obviously that's a mix of domestic and export demand. So in the Western world, we are seeing some financial conditions tightening as well as there is an energy issue. Are you seeing some, industry outlook being divergent in export market versus in Indian market?
See, as far as I'm concerned, there are two segments that we pursue. One is replacement and the other one is new requirements. And what we see is that we would be pursuing with OEMs, and today what is happening is because of the higher cost and in the foreign countries, especially because the energy costs have increased, there are a lot of companies who are looking for alternative suppliers who are competitive, as well as who will bring in more competition for the existing players which are already there supplying to these clients. And that is where we believe we would be able to score.
Understood, sir. And sir, the margins were supported also by an improvement in MHE business, where you reported 14%. So should we think that this is the normal margin now, or how should this movement happen?
We are expected to do 15 to 17% going forward, especially as we increase our turnover in that sector. So I would say that at least minimum we will maintain what we have right now, conservatively speaking.
Understood. So that will help the margin improvement, but the transmission at 24%, that looks like a steady number, or that could also improve, sir?
That looks like a steady number as of now.
Understood.
However, we are always in pursuit to improve them.
Okay, but are there more levers, sir, where you think that you could, tap those and improve margins further beyond these?
No, it also depends on the product mix. See, as we try to take initiatives to further improve the margins, but it substantially depends on the product mix. And as of now, what we have seen is, considering the average which is going on right now, we believe that we should be able to maintain them, and if possible, we will try to improve them.
Okay. Thank you, sir. All the best to you.
Thank you.
Thank you.
Thank you. Participants are requested to kindly restrict your questions to two per participant. Participants are requested to kindly restrict your questions to two per participant. We have the next question from the line of Ankit Babel from Sukham Ventures. Please go ahead.
Yes, good morning, and congrats for a good set of numbers. So my first question is, now to achieve this 2,000 crores of revenue, the growth is as high as 35%. So just wanted to understand, would you be becoming aggressive in taking orders by cutting your price to achieve that kind of a growth?
No. We are interested in the bottom line and not the top line. Okay. And which is, if you realize, in material handling, we have actually reduced our turnover to see to it that we become more profitable. And going forward, that is what we would do. But I have to also tell you that because we have one of the widest product ranges in the market and in the world, we have an advantage over the competition because we can sell wherever there is a demand for a particular kind of application. So that is where we score over the others, and that is how we believe we should be able to sustain our margins going forward.
So the question was there only just a follow-up. So, going forward, the share of exports is expected to increase, which is typically a high margin business. Your utilization level will also increase, which would be giving you a good operating leverage, and you're not taking price cuts, as you mentioned. So,
Right.
I mean, this year you are given a guidance of around 22% consolidated operating margins. So on a 2,000 crores, what kind of consolidated operating margins you people are aspiring for?
We will sustain those margins.
I mean, my question was that only. I mean, why not improvement when you have so many of, levers to improve it?
See, as I told you, it would depend on the product mix that we ultimately are able to shell out. Okay. So it is very difficult to tell you, but there is a constant monitoring which goes on to see to it that we do not go below the margins that we have today. Okay, so there is a lot of balancing factor that we do. However, if the margins improve, we are not going to let go of that opportunity.
Okay. And so my second question is, this planetary gearbox which you have developed, where you see the opportunity at around 300 to 500 crores of revenue per annum. Now, will it be additional to your current product line, or will it cannibalize your existing products?
See, planetary gearboxes is a general term for those type of gearboxes. Today, we are already manufacturing those. What we have mentioned is that there is a particular specialized application that we developed for the cement mill, and which was extremely challenging because as of now, practically it was being imported. So that is where it lies. Those challenges, those kind of applications would not be to the tune of 200 to 400 or 500 crores. That would be the overall planetary type of gearboxes. These type of applications, I would say, would be far and few, but they are like a feather in the cap, like what we developed the gearbox for the air defense ship or the aircraft carrier.
Okay. And so my last question is, this retention money of 60 crores, when you feel it would be fully realized, and with the cash flows coming in, what will be your dividend payouts going forward?
So far as retention is concerned, few are under dispute for which arbitration award is in favor of the company, and there are favorable developments also in this quarter. However, because it is sub judice, so we cannot commit when it will get realized, because the customer has reference available for further appeal to the higher court also. But yeah, we are expediting. Even somewhere we are getting the positive response, or we can say amicable settlement also. But we also have stick to our expectation of the settlement. That is where we are.
Since this is a disputed amount, have you people made any provisions for it till date?
So far as this dispute, because arbitration award is already in favor of the company, and the company with the arbitration award for the customers for which we got this award, those are also at least sound in terms of the liquidity and profitability. So we don't expect that the provision is required to do so.
Okay, so lastly, dividend payouts going forward.
Sorry?
So dividend payout, will you increase your dividend payout considering that now you are debt free and the cash flows would be robust going forward, assuming that working capital and everything remains intact?
I would not be able to comment on it because the decision of dividend payout would depend on the entire board. So it depends on the wisdom of the board to decide on it. Okay. However, my personal opinion would be that if the company does well, we need to take care of our shareholders and our stakeholders.
Okay. That's it, sir. Thank you so much, sir.
Thank you.
Thank you. We have the next question on the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good morning, sir, and congratulations on such a strong execution.
Thank you.
So my first question is on the CapEx that we have announced of 100 crores. You mentioned in the presentation, this is given the strong revenue growth that we see and the long lead times for key machinery. So just to clarify, is this over and above the 100 crores that we have announced earlier for solar plant?
Sorry, the 100 crores that we have announced for?
Solar, for renewable that we had announced, I think a couple of quarters.
It is all inclusive 100 crores, out of which a sizable amount is going towards solar, and the balance is going towards balancing equipment that we require in the plant.
Okay. So our capex for solar is 15 crore approximately.
15, 15.
Yes, 15.
Okay, got it. Fine. And the second question is, I think you even mentioned in the call today that we expect to double our MHE 100 to 3 years out. Our stance used to be that we, in MHE, will only do products and maybe some spares and services, etc. So to go from this 200 crore revenue to 400, 500 crores in 2-3 years, what would drive this growth?
The products has great potential because today in material handling also we have one of the widest product range. Apart from that, there are other opportunities which come up where new projects are coming up on a regular basis, especially port developments and so forth. So there are good potential, and based on the way we are seeing the market progressing, we believe that for us to reach 400 crores, 400 to 500 crores would not be a problem. However, we have all the intentions of adding a few more products from other industries that would help us further improve our total invoicing in material handling.
Okay. And this other industries, the railways or equipment manufacturers for roads and bridges that we had spoken about earlier?
Yes, and there are also other areas, especially in the construction business.
Okay. So we have already developed this product, or our existing products can be used there?
No, we would have to develop those products. Okay. We are exploring those possibilities, and then we would be getting into them.
Great. Fair enough. Thank you, sir, and all the best.
Thank you.
Thank you. Participants who wish to ask a question will press star and 1 on your touchtone telephone. We have the next question on the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, hello, sir. Sir, any write-backs have you booked in this quarter by any chance? And any scope for write-backs on your retentions or any provisions, earlier provisions taken which needs to be written back, either in this quarter or half yearly, just to get a more clearer picture on the margin?
No, there is no write back or any kind of one-time kind of any write back or other income also in this quarter or even in the half year also.
Okay. And did you give out a 2,000 crore revenue number for FY24, or it's just an aspirational number?
No, we already gave out that number. That is our guidance. So we are working towards the same.
Okay, so it's 1,500 crores for 23 and 2,000 crores for 24 at 22% margin.
Yeah.
Sir, in this, the gear business has seen about 24% margin, which is the highest which we have seen. Usually our margins move between 18 and 21%. Is there anything in the product mix this quarter which needs to be highlighted for, or these kinds of margins are one which we can take forward?
No, this kind of margin will continue because we are continuously focusing on our supply chain management improvement, through which it is, workable for us to sustain this margin. And we also have given the guidance for FY23, where we will just sustain the 24% margin on standalone basis also.
Okay. And lastly, sir, what makes you so optimistic on material handling side of the business and, you're calling out a 400 crore revenue? Any Any input which you could share on that part of the business?
No, basically based on the way the inquiry levels are coming through, we believe that reaching those kind of numbers would not be difficult. Okay. And today, we have been in this business for the last 70 odd years, and therefore, we have a reputation for our products. They are known to be extremely reliable and robust. And therefore, the clients quite often insist on customers insist that whoever supplies the entire plant, but the product should come in from Elecon.
And I hope you will be just an equipment supplier in this cycle and you will not take EPC projects.
We have liquidated the entire division which was doing projects, and we have no intentions of reviving it again. It is only products that we would be selling.
The dependence on this segment is on steel, cement, mining and power, and if you could give, which sector is more, you are linked to which of the more sectors?
Fertilizer can also be added to this, but
okay.
Basically it would be these sectors, especially steel and power are normally dominant. But fertilizer also, after normally 3 to 4 years, there is a cycle whereby they also consume material handling products.
Okay. Done. Okay. Thank you and all the best to you, sir. Thank you. Great program. Thank you.
Thank you. We have the next question from the line of Sanket from KDS Securities. Please go ahead.
Hello. Good morning, sir. Congratulations on good set of numbers.
Thank you.
So in the presentation in slide 23, we have mentioned about even open order book on upwards of 700 CR. So just wanted to understand by open order book, what do you mean?
Open order, we mean as a pending order for execution. We got the order which are under execution. That is what we mean.
Okay, understood. And in terms of our utilization, wanted to understand the way we are seeing the demand progressing. Would we be able to cater to the excess demand, or we would have to select projects on which we want to deliver and some projects we let go since our capacity would almost be full?
No, as I told you earlier also, that we are operating at about close to 60-65% of our capacity utilization, and this is without hardly doing any subcontracting work. If we further subcontract, our possibility of a higher turnover beyond, I would say 2,000 to 3,000 crores would also be possible. I would say that, considering a minimum capex, we should be able to do that and maintain our margins also going forward. So that is the advantage we have over the competition, because today we have one of the fastest deliveries in the market today. And customers are saying that if you want reliable deliveries, go to Elecon.
Understood. And sir, on the R&D side, just wanted to understand that are there any more gearboxes on which we are working on, especially for the defense side, like where we are seeing the demand coming in for the shipping sector? Are there any particular products which we are working on, or we are seeing any potential area where we can get increased orders from?
See, there is a continuous endeavor by the management to look at opportunities whereby we are able to widen our product range. Recently, we developed gearboxes for high-speed application for a very special client. Similarly, even in the Navy and in the marine sector, we are always exploring those possibilities. As and when the design team of the Indian Navy approaches us for new applications, we always help them give a proposal, a technical proposal to meet their requirements.
And earlier in the call, you had also mentioned about potential from the EV sector. So if you can elaborate a little more on it, on how gearboxes will help over there and what kind of potential are you looking at?
Sorry, can you again repeat the question? Repeat the question, because quite often the microphone is giving an issue. Sorry, can you repeat it, please?
Yes. So earlier on the call, you had mentioned about the EV opportunity, which potentially gets...
Electric vehicle. Yeah. Okay.
So if you can elaborate a little more on what kind of opportunity and what is the scope?
Yes. See, normally, if you look at diesel or a petrol vehicle, the gearbox is a very complex gearbox. Okay, it has got many speeds, and therefore there is the whole transmission becomes very complicated. As long as EVs are concerned, the gearbox is a very simple device. Okay, and it does not have very many complications. However, I believe that the requirements would be of a longer or a higher life as compared to that of a diesel or a petrol vehicle. And therefore, it exactly fits into our requirements of manufacturing, because we have the desired equipments in manufacturing to pursue this kind of orders. So we would be taking it up actively, especially with the Indian manufacturers of electric vehicles, and pursue this further.
So are we in talks with anyone for this from the domestic market side, or any potential development going on to materialize this opportunity?
I would say up till now that, let's put it this way, that as and when something comes up, whereby we sign an agreement with them or explore the possibilities, that time we would be making any of the announcements.
Sure, understood. Thank you for answering all the questions, and best of luck.
Most welcome. Thank you.
We have the next question from the line of Mahesh Bendre from LIC. Please go ahead.
Thank you, sir. Sir, you mentioned that the current utilization of our factory is around 65%. So to what extent we can go? Whether we can go up to 85-95% utilization feasible?
See, normally in an industrial sector, I would say it would be peaking at anywhere between 80 to 85%.
And this is based on single shift basis, right, sir?
No, it is based on 3-shift basis.
3-shift basis. Okay. So on 3-shift basis, we are working on 65% utilization.
Yes, between 60 and 65.
Sure. And sir, you mentioned that we are planning to develop, looking into development of planetary gears. So the differential gearbox comes into that domain, or is it something different?
No, it does not come into that. Differential gearbox is where it's a very complex gear unit, and that is not what this is. This is where the arrangement of the gears is such that it forms like a solar system, where you have a sun gear, and then you have planets, and they are moving around in an orbit. That is why it is called a planetary gearbox.
So we do not have any plans of going into differential gearbox, is it?
No, we don't, because that is a very specialized field. Normally, the auto sector, especially where you make axles, is where this kind of differential gearbox goes in.
Sure. And sir, when we talk about the new capex, new facilities setting up, I mean, what kind of asset turnover ratio we see in the new manufacturing setup?
It would be that our asset turnover would be nearly 0.8 to 1.1%, you can say, with this new capex cycle.
Sure. Thank you. Thank you so much, sir.
Thank you.
Thank you. We have the next question on the line of Pratik Kedia from Kedia Securities. Please go ahead.
Hi. Thank you so much for taking my question. Sir, I see that the defense industry is waking up and is termed as a sunrise industry in India. Is the opportunity for Elecon equally in line with this particular size? Like, is it equally big? How big can this be in the revenue terms, for say in the next 5 years?
I would put it this way that we have, within the group, we have put in a team of people who are exploring not only from the marine side, but also from the army and the air force. Apart from that, we are also looking at auxiliary equipments which are being provided to the defense sector, and we are exploring these possibilities. We are keen that we look into niche areas whereby they are equipments or component supplies which are highly specialized, because we have very high precision machine tools in the entire group. So we are looking for that kind of work, and which I'm sure that if we find the right kind of company, we should be able to do that very easily. And that is what we are pursuing.
Okay. So are we getting any inquiries or getting some indications for this sector?
We are becoming more proactive, because where we see a potential, as I told you, we have a cell within the entire group which is exploring all the possibilities. As and when there are announcements in the newspaper about any large company coming in, say for example, recently there was an announcement that Airbus is going to put up a manufacturing plant in Baroda. So we will now pursue that and ensure that if there is any potential to supply, we will explore that. So we are becoming more proactive and not waiting for inquiries to come up on our table. Rather than that, we are trying to approach companies and the defense sector as to where we can play a part in it.
Right. And capacity-wise, I believe that we are prepared in case if such queries come in, correct?
Yes. Not only that, we can give a holistic solution within the group. That is our intention, which means that because we have different levels of expertise within the group, including hydraulics, pneumatics, IT, which means programming in electronics, and therefore we can give a holistic solution to the customer.
Perfect, sir. Perfect. That's all from my side, sir. Thank you so much for taking my question.
Thank you.
Thank you. We have the next question on the line of Niraj Monsika from White Pine Investment. Please go ahead.
Thank you for the opportunity. I have two questions.
Mr. Niraj, we request you to kindly come on the headset mode. We cannot hear you well. Can you hear us, Mr. Niraj?
Yeah, sorry, I was on off. What is the export revenues for the quarter?
It has been 32 crores.
So the export revenues have not yet picked up, but while you are seeing traction that side, can you share some more color on how you are seeing this export scaling up in the next few quarters, or the inquiries in this?
See, we have large inquiries on hand, especially in the UK, United States. However, because of the war that came in, as well as the countries are going through, let's say, a high level of inflation and the interest rates have gone up. The customers have become a bit slow in placing orders, and we believe in the, just after Christmas, a lot of orders would get finalized.
Got it, sir. So, and the thing in the past, you had said that the export margins are generally 5% higher than the domestic. Does that still stand, or is it changed?
Normally, I would not have said it is 5%. It is higher than the domestic market, and that continues to be that way.
Got it. And sir, in the past also, you have talked about the operating leverage of a company playing out for gear margins. Do you see that happening? I think you also stated some in the past, and if you can help us reiterate, say if the revenues go to, say, 2,000 crores, so would the margins of the gear business remain at 24%, or would it go to higher number?
It would tend to go to a higher number because of the higher utilization of the assets.
Right.
Because, in the gear business, the fixed costs are very high. Okay.
Yeah,
if you look at it, between the fixed cost and variable cost, the fixed costs are very high because of the expensive infrastructure that one needs to have, especially the machine tools and all that. And therefore, as soon as your utilization keeps on increasing, you will generate higher margins.
Okay. And the last question, in the television, you talked about defense orders playing out in long term. So can you give some color on what type of orders can come to you, say, in 5 or 6 years from now, totally, so that we can understand how the defense business can scale up for you?
See, first of all, the business that we are already in, which is the Navy business, that will continue the way it is going, which means that we are one of the preferred suppliers to the Indian Navy. The reason being that the technology that we have, the kind of infrastructure that we have, and the kind of support that we have been able to give to the Indian Navy, there is a lot of appreciation from the Indian Navy towards this. So we would be considered as one of the preferred suppliers to the Indian Navy. As far as the other sectors are concerned, we are still in the exploratory stage, and we believe that we should get into a niche area where the margins are high and the level of accuracy and sophistication is reasonably high, so that we are able to compete well and get good margins. So this is what we are trying to pursue. Okay. It may take some time, but we will have to see to it that we get into an area where, as I told you, the high precision is where we would be able to get better margins.
Got it, sir. Thank you very much, sir.
Thank you.
Thank you.
Thank you. We have the next question on the line of Hitin Borucha from Joindre Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. So most of my questions have been answered. I have only 2 questions left. So you mentioned we are operating at 60-65% currently, and if we take a contract project, it can further add to our revenue. So do we have any plans to do such kind of business here?
So, what I said was that our utilization of the existing plant is close to 60-65% on a 3-shift basis, and there's a potential to go up to almost 80-85%. Mm-hmm. Apart from that, there is a possibility of subcontracting certain, components, whereby it would further get enhanced.
Okay.
Okay. Does that answer your query or?
Yes, sir. That answer. Yeah, thank you. And so my second question is, you mentioned we are looking to improve the revenues in MHE segment. So what kind of internal measures we are taking to like reach this 400 kind of revenue? Can you throw some color on that?
See, as I told you, our intention is basically to sell products and not to go into projects. Okay? Because the reason is very simple. The projects would mean higher, sales and higher top line. But on the other hand, we realize that it doesn't materialize into higher profits. So our intention is only to sell products, and based on the demand that is there. Apart from that, the company is also looking at the possibility of adding more products which are non-material handling products, whereby we would be able to further increase the turnover. So, considering that and considering the calculations that we have made, we believe that 400 to 500 crores would be possible with that division.
400 to 500 crore in next 2 to 3 years, right, sir?
Yes.
Okay. Yeah. That's all from my side. Thank you.
Thank you.
Thank you. We have the next question from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thank you for the opportunity and congrats on a great set of numbers. So I have two questions. One is going back to defense again. Do you have a breakdown of how much the defense segment contributes to your top line and where you see this rising over the next 3-4 years?
See, in the defense sector, especially the Marine, Indian Navy is our largest customer. Apart from that, we have Coast Guard. They send us inquiries for a particular project, which is a fleet of ships, which could be 2, 3, 4, 5, 6. So based on that, we quote, and if we are found competitive, we get an order. So it is very project oriented. Up till now, there were times when the demand would come in every 3, 4, 5 years, which means you would have a turnover coming in from the marine sector and then it would go down to zero levels, and then after 2, 3, 4, 5 years, it would again come up for another requirement. Now, considering that the Indian Navy has a very ambitious plan of building more ships, and there are a lot of projects in the pipeline which are today on the drawing board of the design team of the Indian Navy, and therefore we are reasonably confident that these would pan out over the next 5 to 7 years. Okay, so I would say conservatively, you can expect about 100 to 200 crores coming in from the marine sector, especially the Indian Navy Coast Guard, in the future.
This will be 100 to 200 annual, or you're saying overall in the 5 years?
This is a very generalized statement.
Okay.
This is based on, because these go into development stage and quite often they get scrapped, then there's a new development that takes place. So it's very difficult to generalize, but this is what we believe could happen.
Okay, understood. Thank you.
Okay, this would be on an annualized basis. That is the potential, I would put it this way.
Okay, understood. Thank you. Thank you so much. And my next question is on, so I've just started looking at this space, and I want to understand that from FY19 till now, you had a significant reduction in your manufacturing expenses, especially in the erection charges and subcontracting costs. So what was the main reason for that? Is that as a result of liquidating your EPC business, or what were the main drivers behind that?
This is mainly because we came out of that MHE EPC business. So whatever pending orders were there, that was only executed, and now there are no more such EPC contracts. So that's why my manufacturing cost is lower, and that is particularly in MHE division.
Okay. So now going forward, the current level of your manufacturing expenses, that should be your sustainable level kind of.
Yeah.
Okay. Correct. Great. Understood. Thank you so much. And best of luck.
Thank you. We have the next question on the line of Karti from Suryash Advisors. Please go ahead.
Sir, good afternoon. Congratulations on a very impressive set of numbers. Three questions I would like to input from these. One is in terms of input costs. What has been the extent of correction, and to what extent does that reflect in your order backlog currently?
Our input cost, particular raw materials, will be in the same range where we are presently in Q2. So that is how we are monitoring our input costs of raw materials continuously on this one.
What has been the correction over, we'll say, last 6-9 months, sir? Or has there been no major change?
Whereas in last 3 to 6 months, whatever order we got, and due to which there are some corrections in the input cost, particularly steel price, there may be some improvement will be there. But considering the product mix, it will be difficult to spell out what the cost ultimately it will turn out, because the orders are to be executed in next 3 to 6 months.
So your 2,000 crore.
I would put it in a very different fashion. While we quote to the customer, we make sure that our input costs are estimated to be at a certain level. And we make sure that we are able to get those kind of prices whereby these margins are properly sustained. And which is the reason why we are able to sustain an EBITDA level which today has become reasonably consistent.
So therefore your 2,000 crore rough guideline would be irrespective of the input cost changes, right? And I'm assuming that's something you've thought about.
Yes.
Right.
When we do the estimate or guidance, it will work towards some estimations. So based on that estimation, we are considering that our EBITDA margin will be 22%.
Sure. So the other question is on your international business where you spoke about several OEMs approaching you. Who would they be comparing you with, sir? I mean, who would the incumbent suppliers be, and therefore what would the advantage you would have on a non-technical side compared to them?
See, normally we are being compared with the international players, especially who are operating in that country. Okay, there are international players like Flender, which is there from Germany, who are an international player. Then there is ACW, who is also a German company. Then, if you go to Brazil, there would be Reng Zanini. So it varies from country to country. Okay. Right. But I would say that because we have a local, if we have a local arm, we have an advantage because the customer feels more comfortable with the localized manpower. Apart from that, we have 3 brands to pursue. One is Benzler, the other one is Radicon, and the third one is Elecon. So based on what is the requirement in that particular country, and where the customer feels comfortable with that brand, we offer those kind of brands in that country.
So if I may push you to answer, sir, would you have a, say, 20-30% cost advantage over these entities?
I would say so. It would range around 20%.
That's an interesting number. And if you look at your current mix, including the exports from India as well as the international entities' revenues, what would be the mix of OEM supplies, replacement sales as well as projects?
We are present, I think, I don't have the numbers, but I'll forward the same in due course of time to Edelweiss.
Sure. Sure. If you could share it through Binay Sardar, that would help, sir. The IR person.
Yeah, I will do through Binay.
Yeah. Thank you so much, and best wishes, sir.
Thank you.
Thank you. We have the next question from the line of Nesar Parekh from Native Capital. Please go ahead.
Yeah, hi. Thank you for taking my question. My first one is, can you help with the mix between, customized and standard gearboxes in this first half? And also, what is the mix between gearboxes go to new plants versus, replacement of some of your old gearboxes?
The customized gearbox, which we understand as engineering product EP, is generally consisting of 35 to 40% in this half year. So it is more precise, it is 37% which is there this time. And balance is catalog product, which is called the standard product.
Right. And between new and replacement?
Presently, I don't have the figure about the new and replacement, which I have to work it out. Is it okay? I can forward this to Binay Sardar to Edelweiss.
Yes, sure. Thank you. And the second question is, and my second question is, in the past you mentioned with regard to your exports business that, you are looking, you are exploring some front-end acquisitions, to, kind of get you closer to the customer as well. So, as of now, what is the status of that? Are you looking at any acquisitions, or would you go with the exports, mostly through organic route only?
Presently, I think there is no such plan which has yet worked out, but we will continue with our existing operations where we are, based out. That will continue. So, at appropriate time, as and when it will work out, we can definitely, announce the same.
See, I would put it this way, that we are keeping our eyes open. As and when right kind of opportunity comes our way, we will pursue that. And hopefully that would mean successful acquisition at that stage.
Understood. And last question is, when we look at our order book, which is around, 700 odd crores, and given the revenue run rate we have, how do you think about the order book visibility? Because some of the, some larger, engineering companies, etc., they have order books with at least, maybe, 3, 4, 5 quarters of revenue in the book. Ours is relatively, to that extent, smaller. If we take FY24 target of, 2,000 crores, and we are at, which is next year at 700. So, if you could just explain what is the general time duration of booking the order, and, after that, how much time does it take to execute? How should we think about the cycle?
See, we have a varied product mix. Okay, the catalog gears are practically the longest delivery that we have would be 2 to 3 weeks. As long as the engineered products are concerned, the maximum delivery would be 4 to 6 months. Considering all that factor, this is a robust backlog that we have today. The reason why I'm saying is that if you remember, when the steel prices increased and then it further decreased, we were not affected by it. And one of the reasons is because we have a very short cycle. It's a very short cycle of execution, which is extremely good, because then you can be very dynamic in the market. And that is where we specialize, because our competitors have a much longer manufacturing cycle compared to us.
Understood. Got it. Okay. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Krishna Kansara from Molecule Ventures PMS. Please go ahead.
Hello.
Yes, can you hear us?
Yeah. Sir, the question is regarding...
Sorry to interrupt, but your voice is not very clear, ma'am. Request you to kindly go off the speakerphone and on handset mode.
Am I audible now?
No, it's not very clear. I'm sorry.
Is it clear now?
That's better, yes.
So my question is regarding the inquiry levels. If you could provide a number as to what kind of increase we have seen in inquiry levels, say as compared to previous years.
The inquiry level in the sense, can you just elaborate something detailed in that so that it will be easy for us to answer?
Sorry, sir?
The inquiry level, what do you mean by inquiry level?
Sir, the kind of inquiries that we are getting, let's say last year we were getting X number of inquiries versus this year we are getting Y number of inquiries. So what kind of increase we have seen?
Generally, we don't work out the number of inquiries. Generally, this kind of information is available with our marketing department. Because sometimes, how to spell out the inquiry. What do we mean by inquiry? That's what we are just comparing ourselves to the work order number, the purchase order and order form. So if you can ask, what I understand, if you are asking about what is the conversion ratio from inquiry to order, so we are having our conversion ratio, I think more than 70% we can consider from inquiry to order.
Okay, more than 70%. Okay. Thank you, sir. Other questions have been answered. Thank you.
Thank you. We have the next question from the line of Ashutosh Garud from Ambit PMS. Please go ahead.
Hello.
Yeah.
Hello. Am I audible?
There is some background noises there and your voice is also low.
Mr. Ashutosh, if you could come on the handset mode once.
Audible?
Okay, if you can come on the handset mode once for your question.
I am on the handset
Mode. Hello.
Yes, now we can hear you better.
Yeah. Okay. So I just most of my questions have been answered. I just wanted your views on how is the domestic competition shaping up? I mean, you are growing at a pretty healthy pace. So just wanted to know what share of market share gain is present in these kind of growth rates for us on domestic front. On exports front, you have elaborated enough on how you are competitive and you would be gaining market share. But I wanted your views on the domestic market share gains.
So our domestic market share in the organized sector, because we are monitoring ourselves through an organized sector which is ranging nearly 34 to 36%. That is where we are. In the domestic market. And so far as how we are placing out considering the numbers, because our technology, our infrastructures and continual improvement on our existing product through engineering process and our R&D facilities. These are our key domains through which we are positioning ourselves.
The other thing is that we have the largest market share and we are continuously monitoring to see to it that we don't lose market share. On the other hand, we would not like to gain market share at the cost of reducing our prices.
Sure. So my question was more on having the strategy is great that we are not gaining market share at the cost of profitability. But I'm saying, is there discussions with clients where they are actually willing to give more orders to you as compared to some of the other domestic competitors, wherein obviously our profitability is also not sacrificed and yet it is contributing to our growth? That is what I'm trying to understand.
Yes, I will give you an answer in a different way. First of all, 70% of our clients are repetitive. Okay. And we forge a relationship with them. And there is a situation where the client says that no, we want only Elecon. Due to various reasons, with every client it is a different situation because they find a level of comfort, whether it is because of our deliveries, whether it is because of our technology, whether it is because of the relationships that we have forged with them, they trust us, etc., etc. So there are various reasons for it, but this is where we score over the competition. And apart from that, we have to realize that we have one of the widest range of product line in the gear business in India as well as in abroad, or even considering the foreign countries. Because no one has a product line which is this wide and which is all active, and whereby we score. Because we are also able to give an optimal solution to the client based on their requirement. Does that answer your question?
Yeah. So, to some extent, yes. I was actually more keen on saying more and more customers, even when you're saying 70% is repetitive and let's say 30% are not as repetitive from ordering perspective. But is this share even going further up because of the quality which you are offering, and more clients are interested in having a more sustained businesses on a qualitative front? I wanted to understand.
Can I answer it a bit differently also?
Sure.
We are continuously evaluating ourselves. How can we be more conducive to the client? Okay, not by commercial terms or by pricing, but by services. Whether it is technology, whether it is after sales, the way we respond to our clients, the way we give them information on what is happening to their project, their gearbox supplies, equipment which are operating at site, and so forth. So we want to additionally further focus on after sales. So all this put together, we want to see to it that holistically we score over the competition, not only in India but also abroad, because that is the way to go. Okay, unless we do that, we will not be able to capture additional market share in the future.
That is helpful. Thank you.
Okay, and there is a continuous endeavor to continuously keep this in mind.
Sir, point taken. Thanks, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hello, sir. Thank you for the opportunity. First question, so recently the government came out with a draft policy for repowering old and low-performing wind turbines. So we do supply gearboxes for wind turbines. So who are our clients for these gearboxes, sir?
See, we have been supplying gearboxes for the wind turbine in the past. However, we have slowly and gradually exited that sector, especially because of the fact that it is an area which goes through wide fluctuations of demand based on incentives provided by the government. So we have exited that. However, our service centers that we have are taking up this and are able to refurbish gearboxes of the competition as well as our own, which have been supplied in the past. And that is where we score, because our service centers are more or less closely located where the wind is very conducive. And there are large number of windmills operating.
But given this new draft policy, which will act as tailwinds for the sector, so are we planning to get into it again, or we'll continue to stay?
Not by supplying to OEs. What we would be doing is we would be looking at servicing the old gearboxes and supplying components as and when required in those gear units.
Okay, sir. Second on, so other gear manufacturers supply to compressor manufacturers and even for metro rail applications. So do we have products in these two segments?
Yes. We have product lines which or we supply components to the metro as well as to the railways. Railways we supply not only in India but also abroad.
Okay. And compressors, sir?
Compressors, as of now, no. But we have always been exploring that possibility of supplying to them, and there's a strong possibility it would happen in the future.
Okay. Okay. And finally, on the exports, so when you spoke to another South-based manufacturers, they said that India has lost the race in terms of the technology needed for gearboxes to Italian and German manufacturers like Flender, Bonfiglioli, Rossi. So wanted to get your thoughts on what will be Elecon's right to win in global markets. Will it be purely on price perspective, or do we have a better technology, or where are we on that?
See, first of all, what the names that you mentioned are companies which are into catalog products, which means they are standard units which they produce in mass scale and supply. Especially the Italians, Bonfiglioli, Rossi. I think you mentioned Rossi, if I'm not mistaken.
Yeah.
Flender is into both, but we come across them especially in the catalog sector, which is high volume sector. Now there are, we have been continuously enhancing and coming up with new series of gear units which become more competitive and have better performance than in the past. As we talk, there is a new series which we are developing also, okay, which has a great potential, and all our marketing people are very excited about it. Okay, that would give us an edge over even the competition. Now, as long as technology is concerned, I can assure you one thing, that we are second to none. It is not that the Germans or the Europeans have a better technology than us. Okay, we have in the past, about 15, 20 years ago, we had bought technologies from them, and we have continuously improved upon it. And today, after that, we've come up with our own series of catalog gearboxes in a big way. As long as engineered products are concerned, which means made custom made, we have seen to it that we are able to optimize and learn a lot. And I'm very proud to tell you that our technology not only is second to none, but we have our unique features which score over the competition in a lot of applications. And
Thank you. Thank you.
A lot of customers give us credit for that.
Okay. And does it translate into, say, OEM relationships? Say, because, say, when I buy a Coke industry machine, it will come pre-installed with Rossi or Bonfiglioli. So, say, let's say 2015, I had 100 OEMs. Now I have 150 OEMs. Can you give some number on that figure, how many OEMs we cater to, anything on that lines?
Would be difficult to say. To tell you honestly, I also won't know, because we have so many countries, so many areas that we look into. So everyone would, every marketing person would have those figures which we need to accumulate. But what I can tell you is that the Germans have been dominant because, let's say if you are talking about bottling plant, then, the manufacturer of the bottling plant is German. The gearbox manufacturer is German, so German to German, the contacts are very strong. So similarly, but we are making inroads. For the Indian supplies, quite often we are able to score, because if they give us an opportunity, we are able to substitute those gears with ours, okay, and become an OE supplier. So those are kind of opportunities that we have taken up in the past and are doing so even today. And we will continue to do so.
Okay. And just one last question. Are we trying to recruit any top guys from any of these Europe companies to develop our business for business development purposes to increase our exports? Will that be a key requirement, right? To have a local guy talking to local OEMs. So will we need such top guys from other gear manufacturers?
We have operations in very many countries, as you know. Okay.
Yeah.
We already have people out there who are the localites who are working out there and who are grabbing these opportunities. Now, while, as I told you, we are trying to grow the business in those areas and increase our exports, we are looking at these opportunities. Like you rightly said, we are looking for employees who are specialized in application engineering and who are top guys, quite often even coming from the competition, so that we are able to create that impression with the customers and back them by solid supplies coming in from India. So that is the ultimate goal, and that is what we would do anything to do this. Does that answer your question?
Yes, sir. Thank you. Thanks for your time.
Thank you.
Thank you. We have the next question on the line of Gunjan Kabra from Niveshaay. Please go ahead.
Thank you for the opportunity again. So one thing I wanted to understand, according to the industry working, so if there is a capex announced by XYZ company in September 2022, say September 2022, suppose the plant is expected to commence in September 24. So in this time period, where does Elecon receive the order? So wanted to judgment in which time period the company receives orders, since the time span of the capex announced by any user company is usually like 2 to 3 years.
It will depend on industries, which industry it is going to, and it will also depend upon the kind of product that they order on us. As I told you, our catalog gears we are able to deliver within highest or the longest delivery would be 4 to 6 weeks. For engineered products, it would be anywhere ranging from 4 to 8 months. So depending upon the convenience of the customer as to when he needs it, how he needs it, whether his site is ready to receive the gearboxes, okay, when is he going to be in a position to pay us, based on all this, he places an order on us and we supply. So it is very difficult for us to give you that answer.
Okay. Sir, also in the beginning you told that the defense order book is around 80 crores this time of the total order book, and in the last quarter it was around 130 crores. We received orders from defense. So have we executed the difference amount?
There was because there was a project which was going on, so partially it must have been executed. As of now, it ranges around that figure.
Okay. And so one more thing, that last quarter employee cost increased on account of business development and R&D expense. This quarter the same expense on the basis of quarter on quarter it decreased. So how does that cost parameter work in every quarter?
Generally, employee cost, it depends not only the salary, there are other factors are also there which are going to have the effect to that, maybe related to the incentive bonus or other factors also.
Okay.
See, we try to rationalize and equate quarter on quarter. However, there are certain incentives that are provided to the employees which are performance related. So as and when they get evaluated and are distributed, they come into the financials.
Okay.
Quite often it is difficult to estimate, otherwise then there is a provision which is also being made.
Got it. Got it. Thank you so much and very good luck.
Thank you.
Thank you. In the interest of time, we request participants to kindly limit their question to one. We have the next question from the line of Ankit Babil from Shubhkam Ventures. Please go ahead.
So just a bookkeeping questions. Have you factored in this 200 crores kind of revenue from the Navy in your FY24 guidance of 2,000 crores?
No.
Okay. And in your order inflows, do you include sales of your standard or the catalog gears also, which are basically the off-the-shelf kind of products, when you give your order inflow numbers?
Yeah.
Of course, yeah. Yes.
Okay. And lastly, can you repeat your market share number, sir?
Our market share in the organized sector is ranging 34 to 36%.
And what is the size, the share of organized market to the overall market?
Nearly 2,000 crore.
No, 2,000 is the organized market, right?
Yeah, organized.
And what is the size of the total industry, sir, including unorganized?
Unorganized, the figures are not available, but with rough idea, not the ballpark number, maybe 2,500 to 3,000 crore.
I would say more close to 3,000 crores.
Okay, so mostly it is organized only.
Yeah. Yes.
Yeah. Okay. Thank you so much, sir.
Thank you.
Thank you. We have the next question on the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
No worries. My questions have been answered. Thanks.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you all for showing so much of interest in the company. I would say that we have been performing consistently. This particular quarter also, our results have been fairly robust and strong, and we are seeing that we will be able to perform on this basis on a continuing basis even by the end of the year and going next year. So this is where we are feeling reasonably confident, and I would say that our endeavor is always to continuously improve our performance, which we are trying to do on a sustainable basis. Thank you all for showing this interest, and if there are any other queries that you have, do not hesitate to contact us. Thank you.
Thank you. On behalf of Edelweiss Broking Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.